This, in my view, is the most serious appointment that Carney has made.
Wow.
My understanding is, and again, take this in the rumor mill, that Carney was chasing him down a number of times. I think Marc-Andre enjoyed his roles out of the limelight, but Marc-Andre is a longtime Quebec Liberal. I suspect it tugged at his heartstrings. But this, to me, is one of the most notable tells. Are you truly going to move right of center, which is exactly what you and I have been hoping Canada does, at least from an economic perspective. This is the clearest tell that I've seen so far. So I'm excited about it. And I think he has the opportunity to be one of the strongest chief of staffs we've had in a very long time in Canada.
All right, John, welcome back to the tank. I missed you. I don't know if you missed me, but I have been traveling to the West Coast for the last week and a half, and it's been pretty tiring to say the least here. Coming back first off from Web Summit, first time being hosted in Vancouver, British Columbia, and then over to the CVCA Invest Canada conference in Calgary. So what have you heard about Web Summit? I don't know if you were out there, but I don't think you were.
I was not.
You were not out there. So what did you hear?
A couple of the folks on our team were out there. I understood that it was approximately 15,000 people, which is a very good number. I think it's about half of
That's correct.
The Toronto number, which I think is kind of what they were trying to target. I heard the local buzz was very good for Vancouver. And I also heard that the vast majority of the buzz was around AI, was the familiar topic. Lots of early stage folks there, and I think it sounded like it was a very good first Web Summit for Vancouver.
Yeah, look, I mean, absolutely a good start for them. They drew about 16,000 attendees, as you said, less than half of what Toronto's Collision had, but featured a record over 1,100 exhibitors, which is obviously part of their model.
Oh, good.
I think the one thing that we noticed is, so we hosted 3 events. We had a family office dinner the first night on Monday before the conference officially kicked off with some of the West Coast, British Columbia's wealthiest family offices. It was incredibly insightful. We did that with our partners at Northwood. And what I was just amazed by was how many successful entrepreneurs live in Vancouver. Like, I'm talking global renowned entrepreneurs living in Vancouver that want to build up the ecosystem there. So that's awesome. Access to capital and talent. The other thing that I noticed was that the city has a huge amount of technology companies already there. We hosted another 300-person event at the Post, which is AWS's head office, 20 floors, 5,000 people. Now, that is a conduit into the US for people coming in from overseas, from employees. So they use that as a way to kind of help people get their visas into the US market. But still, people are living, and some decide to stay and raise their families there. So they have a great amount of talent. On the negative side, I will say that there was no signage around the airports or in downtown. There was a lot of people who didn't even know the event was happening. So they need to figure that out for next year. And the big faux pas was a lot of the people didn't actually notice this probably, but the lanyards that people were wearing had the City of Toronto logo on them. The lanyards for Web Summit
really
had the City of Toronto as their logo.
Oh, I'm sure people in Vancouver loved that, because they really loved the fact that Toronto is the center of the universe.
Terrible. I don't know if they ran out or if they were using leftovers from Toronto. Got a good price on it. But it was pretty awkward to see people wearing Toronto lanyards with the Vancouver Web Summit. But you know what? It was a good first start.
Good.
We had a good panel with Ivan Zhang from Cohere, So-Young Lee from 12 Labs, head of AWS Canada, Patricia Nielsen, and Adam Kokari from HubSpot Ventures. So that was great. And then we hosted a 50-person VC and founder dinner. And there was a good amount of West Coast VCs that came up for the event. And some of them said it's been their first time in Vancouver in almost a decade. So,
Jesus, that's surprising.
I mean, it's not that surprising, only because it's only an hour flight to the Bay Area from Vancouver. So it's obvious that a lot of people fly down to meet with the VCs instead of the VCs coming up. And that just makes total sense, given obviously, like, how much more there is probably for them down there than there is to come up. But hey, this may have changed things here. But I think it was a good start. I think, they projected, an economic win out of this, 57 million in direct spending versus the 93 million plus in total impact for BC. And obviously the goal is to get to 40,000 attendees by 2027. But, next year, maybe they can get to 25 or 30,000. We'll see. But again, great start. I hope they continue this trend and moving in the right direction. John, I got to change things up here. Obviously, there's this article that was going around when I was over in Calgary. Obviously, CVCA had their annual private equity venture capital conference, and I was there as long as some of your Mavericks colleagues. But before the conference, they obviously released their reports along with BDCs, and the numbers are not pretty. There's been obviously a huge slowdown in early stage capital that is flowing into the Canadian startup universe. It's the lowest we've seen in 5 years. And so this capital is drying up, and the also part that U.S. capital is what we were relying on to kind of keep those numbers high.
That's the issue.
Is also drying up. So what are your thoughts here? Fewer companies are obviously getting funded. You made a big post about this on LinkedIn, and we're seeing a trend that continues to go in the wrong direction.
Yeah, it's not conclusive, but the indications are not doesn't give you optimism. Now, this is the 5-year data since COVID, right? So, COVID had, the big drop off, the big irregular bump, and now this is kind of the regular state, which on the surface doesn't seem to be that far off to what things or the trend line was before COVID. But when you start to unwrap it a little bit, exactly what you have just said is fewer deals, larger average deals. If you take away the AI deals, which is not too dissimilar in the United States, you see a very different funding story. But the biggest difference between Canada and the United States, because people argued, they have similar patterns of going up and down. There's a massive difference. When you have an enormous amount of capital, and if it drops 80%, you still have a critical mass of domestic capital in the United States. The problem in Canada is if you want a long-term sustainable ecosystem, you have to look at the full chain of VCs right from the earliest stage to the later stage.
Totally.
And if you remove the foreign capital, which is really the United States, and you look at the state of financing by the domestic sources, it is getting down to a level of criticality. And I don't care what anyone says, if you do not have a strong domestic VC system, yes, you'll get some foreigners coming in, but you need that early stage in particular to set you up for the later stage. And this is where the issue starts to become concerning. And then when you correlate the deployment data with the fundraising data, so the fundraising data tells you what might happen 2 and 3 years from now. And the fundraising data for Canadian domestic VC is coming at a decade plus low. That's the problem, and that's the worry. So that when you look at this, you get very concerned on that trend line. Last thing that I will say, and again, this is always what happens when you see this data. It's the chicken or the egg. Is it the lack of risk-taking from VCs? Is it the lack of entrepreneurial talent building investable companies? Who the hell knows? Frankly, if you speak to some of the VCs, they blame the entrepreneurs. The entrepreneurs blame the VCs. Personally, if you're asking me, I see plentiful of great quality companies in this country. What I am worried about is risk appetite, particularly from investors and from capital pools that are supplying the capital to the VCs. That's where I'm getting my anxiety from.
I mean, it's really interesting because like that flow of funds takes so long. The feedback loop is quite long in this space. So it's
Yes.
hard to take a snapshot in time, but just to take the 2024 VC market snapshot for what we got out of the BDC report, VC investment in Canada dropped to 7 billion, down 31% from its 2022 highs. Deal count was 652, 35% drop from the 2022 highs. And the average deal size and volumes obviously were down. It did say, though, in the BDC report that seed and early stage deals have held up better than the later stage, which I found very interesting, how they thought, through those numbers. But obviously, this is sort of the same as what everyone in the VC market has been seeing. Canada, outperformed the US in deal count, but the US saw bigger deals and more mega rounds, obviously. So the larger pools of capital, given these larger funds that have been raised, are obviously going to those. Investors are just cautious right now, John. Obviously,
that's exactly what's happening.
That's what it feels like, is investors are just cautious. And so these harder fundraising conditions for startups just mean timelines are longer, right? Terms are a little bit more stricter, and things get a lot more difficult as you go through that fundraising journey from, pre-seed to seed to Series A and beyond. And I think the market outlook, though, for 2025 and beyond is, the way you summarize it, it's like flight to quality, prioritize profitability, capital efficiency, revenue per head, lower valuation expectations, things like that. But it's super confusing when you see these mega AI deals also being done down south. And I think founders have to separate those two and not get conflated that everyone is in the same industry.
Yeah. And I think you have to try to differentiate. You use the term flight to quality, but is that really what's happening? Or is it flight to risk off? I think it's the latter. And, what I find fascinating as an investor, this is the best time to be deploying capital. Not when the markets were rising. I could speak on behalf of Mavericks in 2021, 2022, despite us reviewing, thousands of deals, we backed off only because the valuations were beyond acceptable. And, you make money really during times of fear and greed. We have moved from greed to a time of fear. And as an investor, this is the time that I like to deploy. Our firm has never been busier. We're flat out. And part of my concern is, with the global volatility, are people getting nervous about deploying because there is lots of uncertainty, but that's your risk reward trade-off. And are people just pulling out of the asset class, at least temporarily, sitting on the sidelines, parking their dollars into fixed income? And this is a big concern if this happens. And the last thing I'll just say is, we as a nation, for the first time since I've been investing, are actually talking about lots of technologies that are truly will change, whether it's the national security of Canada, the sovereignty of Canada, etc. Or in other words, deep tech. And these are the sorts of investments that people fear because they're big bets. They may require capital, but these actually move the needle. And what you just said, for example, in the United States, you are seeing some of these big, crazy bets with some pretty, wild stuff because they're viewing this as a threat to the United States. And so the question for Canada, are we really going to try to build Canada, or are we trying to find a pizza delivery service that's 30-second faster than what we currently have? And that's the question that I have.
Well, speaking of big bets, so I watched the Bloomberg, kind of documentary on Stargate, and the sheer size of this thing that's being built, and they're only on the first phase of it. And then you read sort of the headlines on what Bell Canada, one of Canada's oldest companies, is betting on, right? So they're launching 6 AI data centers in BC to start this national supercluster network. Hundreds of millions of dollars being invested. They're starting with 2 smaller facilities in Kamloops and Merritt, obviously. And these are not just like your average data center server farms, right? They're talking about hyperscale facilities that can top 100 megawatts. comparing that to the US though, and what the 500 billion that Stargate is expected to consume, we're talking about gigawatts. Massive energy consumption compared
Nuclear
to
power plants need to power
right.
them. Right.
The reason they chose to put it where they are is because this place in Texas, Aberdeen, I think it's called, is producing too much energy. They can't get rid of it fast enough, right? And so I just wonder if we're making bets that are big enough for what we want to be only supporting Canada, whereas like the Stargate mission is to actually be the supercluster for the world. Right.
Yeah.
They want everyone to plug into that for inference, for consumption, and for AI models, not just America. Obviously, they want America to have control of it first. But is there a question of whether or not we always look at the Canadian bet as the only bet to make and not the global bet?
No, it's a good point. I would take this in three discrete pieces. Number one, let's stop using the Canadian bets by funding foreign-based multinationals to compete against us. That would be nice for a change to stop doing that, right? So when we do something, again, I don't know all the details of the Bell Canada bet, but how much of that capital they're investing is really going to Canadian IP versus non-Canadian IP. So, but
well, they're buying Grok AI chips called LPUs,
now,
but they're using to store the data, obviously, on Canada's sovereignty.
Yes, correct. And we can't really necessarily help that because there's no current replacement for a Grok chip or NVIDIA GPU chip or what have you. But stop with the leaky boat. Number two, we're going to have to focus in on import substitution. So those things that we think out of convenience, we might as well use the US because it's there already. We have to stop doing that. And we do need to create, our Canadian solution so that we could stop the importation. But to your then third point is, once we do the import substitution and we're using it for Canadian consumption, are we really building something for Canadian export to the rest of the world? And it's that last piece that we've done not a very good job at. But at the end of the day, if we're not exporting it, first of all, our domestic market is typically not big and deep enough. And number two, it doesn't really give you the wealth generation if you're able to export value of goods and services outside of Canada. So no, I agree with you.
Okay, so we had the lead on AI and transformer models, right? With
Right.
Jeffrey Hinton and stuff, and we could have had the lead on open banking, but we still don't. And now your good friend Jim Balsillie is urging Canada to go all in on stablecoins and open banking. At the Inventures 2025
Yes,
concert,
he did.
Jim Balsillie told Premier Daniel Smith that Canada needs to speed up adoption of stablecoins and open banking, or risk basically being left behind as the U.S. moves fast on crypto. What are your thoughts on this? Because I thought this was a great conversation to be having right now, especially in front of Danielle Smith. And, the theory is, Jim says, if we do not get stablecoins and open banking in Canada set up, Trump is just going to bypass Canada's fiat currency. I believe that is actually a possibility.
Absolutely. Well, but you also could have pointed out that Canada was one of the beacons of cryptocurrency, early adopter.
Absolutely.
Birthplace of Ethereum, and we lost that one there too. And still, there is a lot of enthusiasts. Now, many of them ended up going offshore over the last decade or so, but there is there's still a reasonable depth of talent. One of the issues is going to be that Jim was really speaking to is, for the first time, and I never imagined this for at least a decade, the U.S. as the reserve currency is realistically coming under question for the first time. And the question of the U.S. actually servicing its debt coming in the first time. So the U.S., interestingly, is going hard on the cryptocurrency. And they're going to try to make their move that if, as opposed to Bitcoin going through the roof, why not make the US dollar the biggest cryptocurrency in the world so they really maintain their reserve status? And
so they have two global reserve currencies, the dollar and the USDC.
It's just like gold versus Bitcoin, same thing.
I mean, look,
right?
I think Alberta is in the sweetest spot to take advantage of this, given how much they sell globally, right? To be
Right.
at the center of this, this is the time for them to have a voice in this conversation and influence over creating some type of, Canadian
Yeah.
stable coins and whatnot.
Yeah, and it's petroleum that is really the trading of petroleum and denominated in US dollars is the absolute underpinning of the reserve currency, and Alberta has an interesting role to play there.
A stable coin that's pegged against the petrodollar, if you will, in what they
Right.
sell out of Alberta would be an interesting way to put it.
It'd be
You,
interesting.
speaking of politics here, John, there was an announcement out of the Carney cabinet putting a chief of staff in place that people, I think, are pretty happy about. Carney picked
Yes.
UN veteran Blanchard, Marc-Andre Blanchard, ex-UN ambassador and top Quebec executive from CDPQ, as his chief of staff, which is obviously filling a crucial spot in Carney's new government. He's got big shoes, obviously, to fill, replacing Marco Mendicino, who was running for Toronto mayor, I believe. But tell
Maybe,
me what your
yes.
thoughts here on this after running, obviously, a senior role at Quebec's $473 billion Case Depot.
Yeah, I've known Marc-Andre for 20-ish years. This is this, in my view, is the most serious appointment that Carney has made.
Wow.
I mean, I was, pleased with Tim Hodgson, who I think was a serious candidate, but uh, Marc-Andre ran McCarthy's when it was the largest law firm in Canada. He ran it exceptionally well, very smart individual. He's business savvy, he's legal savvy. My understanding is, and again, take this in the rumor mill, is that Carney was chasing him down a number of times. I think Marc-Andre enjoyed his roles out of the limelight, but Marc-Andre is a longtime Quebec liberal. I suspect it tugged at his heartstrings. But this, to me, is one of the most notable tells. Are you truly going to move right of center, which is exactly what you and I have been hoping Canada does, at least from an economic perspective? This is the clearest tell that I've seen so far. So I'm excited about it. And I think he has the opportunity to be one of the strongest chief of staffs we've had in a very long time in Canada.
No, I mean, it sounds like he's got the right recipe for what we need here. Carney is saying that this is going to be the biggest economic shift since World War II. And the agenda that they've laid out with, Blanchard beside him to do this stuff with, a track record that includes solving regulatory issues, building alliances worldwide, and leading teams to hit their climate targets ahead of schedule is obviously something Carney saw as someone he wanted to bring into the fold. So who is next on his list? We shall see. But the last thing I wanted to talk to you about, John, is VC fund stakes are basically on sale at a discount right now.
Yes,
I don't know if you saw this article in the information, but
I
there are a
did see
lot
that today.
of liquidity transactions happening.
Yes.
So to give our audience some understanding of what we mean by VC stake, so that is the limited partnership investments are basically put into a fund on a unit basis, typically called Class A units. Those are for limited partners, and those are illiquid units for the most part, but sometimes when large investments are made in funds and they're in their second half of their, 10-year life or more than 10 years, they can sell those stakes with the GP approving it, but they can sell those stakes and they often come at a discount to the net asset value of the current fund. So let's say you have a million or $100 million invested in a fund. It's now worth 2.5 total value paid in capital. It may transact anywhere from 1.5 to 2 million. So a discount to what the NAV is. But a lot of pension funds are offloading hundreds of millions of dollars in VC fund stakes. Lee Fixel's family office dumped dozens of early stage funds. We know a little bit about that. And obviously Yale's endowment is shopping billions in private equity stakes. So as these
Harvard.
endowments, Harvard, exactly, with their tax status being in jeopardy, with more of these like larger institutional investors looking for liquidity as distributions from maybe IPOs and M&A is obviously at historic lows. What are you seeing, John, out there? And how do you think this plays out?
There's both a good and bad news story there. I mean, the bad news, of course, is the lack of liquidity for these large capital pools to, reinvest in new venture or private equity funds. But what this is doing, it is freeing up liquidity so that they can do that. So, and this trend's been going on for a while, but it's gotten more squeezed right now, and the discounts have gotten very high. So, one of our advisors was suggesting that they were working with a client and the discounts were at 60-70%.
Wow.
So massive liquidity. The article that you are referring to referred to 50% discounts. This is the stunning number. Before you'd see 10, 20, 30% sort of in that range. So what is the smart news is a lot of the LPs got drunk on the number of funds that they would invest in and that they were competing against each other. So what have you done as an LP? You put in money in one fund and put money in another fund, and then they compete for the same asset and increase the price, and you've got capital on both sides of this. And so what they've done is they're realigning, reducing the number of funds, but they are, in many cases, increasing the commitment they have in a fund so that they have more relative weight. So they're not a small micro percentage of a fund that's just sitting there passively. So there is some good, is some bad, but the real driver today is this lack of liquidity, and that's the concerning factor.
I think it's more negative, honestly, than positive. I appreciate you trying to spin it well here, but I think just in terms of like supporting newer, more emerging managers, it's not a good look. Obviously, they're consolidating. I think a lot of their LP stakes. You got secondary buyers like Lexington and Stepstone, snapping up these fund stakes at pretty steep discounts, as you mentioned. It used to be 10, 20, now it's 50. There is some creativity that you can do as a manager. You can do these strip sales where funds sell slices of their startup portfolio to give LPs cash back. There's continuation funds, which we've seen a lot of. LPs exit early, new investors take over the stakes. And then there's these like kind of multi-strategy ones where you can kind of create different vehicles alongside of it. But Jeffrey said that the global secondary sales of VC fund stakes hit a record 162 billion last year, up 45% year over year. So
that's crazy.
That
huge.
is crazy growth in this sort of space. And the returns may actually prove out to be pretty good. If somebody's
those discount
right
levels,
now.
yes, they might be pretty good.
We'll have to wait and see.
The other thing I would say is look at the correlation. Now, Harvard and Yale are having their own particular issues, with the Trump administration. But even on the large capital pools, one of the things I do notice that if there is turnover in the teams, in the pension funds, et cetera, when the new people come in, they start looking at the various assets. They weren't there in the first place, and they start trying to do things anew as well.
Well, it's quite obvious. It's like, if this works out, I don't get the glory of it. And if it doesn't work out, I took over the position from somebody else.
Correct.
So, I also don't get the win of that. So we'll see, John. Thanks again for joining us in the tank. Until next time.
All right. Thanks,
See you,
Matt.
pal.